When approvals turn into nightmares, surviving last-minute loan denials. Talking about nightmares, these could destroy your home purchase in about 72 hours. Check this out. 6% of home contracts fall through, and 14% get delayed, often because of last-minute mortgage denials that blindside buyers just days before closing. But let me be clear, they don't just blindside buyers. They blindside us, the mortgage professionals, just as much and are just as frustrating. But that's not what the story is about. I'm about to show you the 5 deadly mistakes that trigger these denials and the emergency playbook that could save your deal. Skip the video and you might be the next horror story on Reddit. Hi there, I'm Ella Gurfinkel, Senior Loan Officer with almost 30 years of experience. Yep, coming up in just 2 months. And I've seen buyers lose their dream homes 48 hours before closing. And I've also saved deals that seemed impossible to rescue. Was I a party to some of those deals that were falling apart about 48 hours before the close date? Yep, unfortunately. So a lot of what I speak to is from painful personal experiences and the survival history. Today, I'm sharing the brutal truth about these last-minute denials and exactly what to do if it happens to you. So picture this. You've been approved. You've packed your boxes, you've scheduled the movers, and then your phone rings 3 days before closing. I'm sorry, but underwriting has denied your loan. Damn, this isn't some rare nightmare. It's happening to real people every single day. Just last month, I had a client call me in tears because their bank pulled the plug 24 hours before closing. Why? They bought a car the week before. So here's what most people don't understand. Your pre-approval isn't a guarantee. It's more like a hall pass that can get revoked at any moment if you break the rules. Okay, let me rephrase that. You know how you can get out on parole for good behavior and then you screw up again and you go back into lockup? That. And trust me, the rules are stricter than you think. Let me break down the 5 deadly sins that kill deals at the finish line. Deadly sin number 1, job changes. You got a better job offer and took it between approval and closing, right? Congratulations, you've arrived. You just nuked your mortgage. Maybe. Even switching from W-2 to contract work at the same company can trigger a denial. Banks see any employment change as new risk, especially if it involves commission or contract income. Deadly sin number 2, new debt. That car you needed before moving? Right. That furniture you financed for the new house? Every new debt changes your debt to income ratio. And guess what? Just because you had a conditional approval up front or just because we ran your credit up front doesn't mean you can willy-nilly go out there and get new debt like a car or furniture. Because on conventional loans, your credit gets ran softly right before we close on you. So we know what you've been doing. Even if you went to Macy's and got that $20 discount because you saw something on sale and wanted to save $20 and got a new credit card, even that can impact you. I've seen deals die because of that and less. Deadly sin number 3, large deposits, large money movements. Banks track every dollar. Make a large deposit without documentation? Red flag. Pull money from savings for closing costs at the last minute? They want to know where every penny came from. One client's deal almost died because his mom gave him cash for closing costs, and he deposited the said cash without a gift letter and frankly without talking to us about the whole process first. Deadly sin number 4, low appraisal. 7% of contracts get delayed specifically because of appraisal issues. If your home appraises for less than the purchase price, the bank will only lend based on a lower appraised value. Now, here is the phrase I often speak to my clients. In lending, it's always in the favor of the lending institution. Kind of like the casino always wins, the lender always wins. It's always the lower of the two. In this case, the home appraises for less than your contract, the loan is now based on the lower of the two, which is the appraisal. And if you don't have the cash to cover the difference, game over. I mean, case in point, I'm actually getting a transaction terminated today. Yes, that deadly sin. This is not something you can control, nor can I for that matter, because the appraisal came in significantly less. And no, it wasn't the case of the buyer not having the funds to cover the difference. It was a matter of a smart financial decision to not go into a property over $100K upside down out of the gate. But I'm only using this example, and it's as real as they get. $103K under the contract price. In all my career years, I've never seen anything that insane. But that is something definitely that will stop a deal dead in its tracks and pretty much derail everything. Now, deadly sin number 5. Credit score changes. Banks pull your credit again right before closing. I just mentioned that. Imagine this. Miss a payment, max out a card, or even have someone run your credit for something else. Your score drops, you got a new debt, your rate changes, or worse, you no longer qualify. Here is the really scary part. Lenders are doing more verification than ever. We have to verify employment on the day of closing or right before. We have to use third-party companies to check your income, your debts, and sometimes your assets right up until the closing date. Screw around? Find out, right? In today's market, with rates upwards of 6.25% and stricter lending standards, underwriters have to be extra cautious. They've seen what happens when they get sloppy, and they're not taking chances. And frankly, their license numbers, just like mine, are attached to that loan, so nobody wants to take that risk. Come on. With the uncertainty around Fed rate decisions, some lenders are tightening their guidelines even more. So what got approved last month might not fly today. Now, here is something else to consider, something that typically you, the buyers, you, the consumers, don't get to hear about or find out until it's hella late in the game. So you know how we always talk about the conventional loans. And if you don't, check out one of my videos or multiple videos I've done on that subject and what the difference between FHA and other loan types are. So conventional loans require that all of your information is ran through the automated underwriting system. And this automated underwriting system constantly gets updated, tweaked, and the screws get put to it by Fannie Mae and Freddie Mac. So it's not us or the underwriters being difficult. It's because those automated systems that now pretty much are deciding for all of us if you can get a loan, I mean, to some extent, garbage in, garbage out. But the automated system that has been tweaked to a higher standard will no longer approve you, even though the prior iteration of the same automated underwriting system may have approved you just fine. So what do you do if you get that devastating phone call? Now, here is your emergency playbook. Step 1, don't panic, act fast. You have options, but time is critical. So what you want to do is immediately contact your real estate agent and ask the seller for an extension. Most sellers will potentially work with you and give you 7 to 14 days if you're honest about the situation. Step 2, get a second opinion. Not all lenders are the same. What one bank denies, another might approve. If you're working with a broker, they can shop your file to multiple lenders. If you're working with a mortgage lender or direct lender, they can either escalate or broker out or find an alternative solution. And if you went direct to a bank, then you want to go to either a direct lender, independent mortgage bank, or find a broker near you. But you need to do it now. Step 3, fix what's fixable. Job change? Get a letter from your employer confirming your employment and income. New debt? Either pay it off immediately if possible, roll it back. Credit score drop? See if you can get a rapid rescore. Let me give you an example. Many moons ago, we were 3 days out to closing. Literally what I started this video with. Horror stories, 3 days before close, 72 hours is your 3 days. We pulled a credit recheck on a client getting ready to close. And they thought they were done. So they went out and got furniture. Of course, it was a sale. It was a promotion. It was one of those 000 deals with 0 interest and 0 payments and 0 whatever for however long. Who cares, right? Except for now it was a new debt. And even though it was a 00000, we still had to figure out a payment when that 00 promo was over. And that payment, no matter how small it was kicking us in the shins. So the solution was pretty drastic and pretty immediate. You're going back to the furniture store and you're getting them to reverse everything. I don't care if it's a promotion, you want the house or you want the furniture without the house. Yes, that sounds mean, but priorities, people. And sometimes everybody needs a dose of reality, even though it's not something you want to hear. So yes, the furniture got returned, even though it hasn't even been delivered. The debt was no longer there. We got a closure letter. We moved forward. Cost us a delay, but we moved forward. What I'm trying to say is there's typically a solution if all parties are willing to work through them. Step 4, consider alternative programs. Maybe you no longer qualify for conventional, but you may still be able to go FHA. Force a shot, right? Maybe the rate changed, but you can buy it down with points, or maybe now, speaking of, ARMs are becoming more advantageous. So maybe now is the time to switch the loan from a fixed to an ARM to make it work. And a good loan officer will explore every option. But there is the best advice. Prevent this nightmare from happening in the first place. From the day you get pre-approved until the day you close, treat your finances like they're made of glass. Don't move it. Don't change it. Don't change jobs. Don't take on new debt. Don't make large financial moves without talking to your lender first. You know, the best clients to me are the ones who actually read the emails that my system, okay, little exposure here. But yes, a lot of my emails are coming from my automated system. Don't take me wrong, I wrote them from years and years and years of terrible experiences. But the best clients actually pay attention to the emails that go out. And one of the first email that we send out after your pre-approval is done, things to not do. And as time-consuming as it may be for me to get the texts and the emails and the phone calls from the clients who are pre-approved or who just got in contract, hey, your email said to not, and then they list off what to not. But no, I'm glad you called. I'm glad you texted. I'm glad you emailed. I'd rather you ask before you make a huge mistake that will potentially decimate your chances of getting a house. So don't make those mistakes, but talk to your lender. And if you have any doubts at all, don't be cavalier. The home purchase is the biggest purchase of your life, so do not be cavalier and just assume that you're okay and nobody will find out. Because guess what? We do. We do get to play detective. So talk to your lender. Whether it's me, whether it's not a lender, bottom line is talk, ask, get the right answers. Don't assume anything. So look, I've saved deals that other lenders gave up on. And I've held clients' hands throughout these nightmares. And have I lost deals? Yes, of course I have. I'm just as human as the next person. But I've also learned from my mistakes, and I want to share, and the client's mistakes too for that matter, so I want to share that with you so you don't make those, so that you can have a much smoother ride to closing than otherwise could be. So if you're buying a home, you want someone in your corner who knows how to navigate these crises. Don't wait until disaster strikes. Work with a professional who will guide you through the process and have a backup plan ready. One of my favorite sayings, it's actually on my shelf in my home office, is when plan A fails, there are 25 more letters behind it. I usually start a transaction with more than one option for a client. God forbid, we have a backup. So book a chat with me. The link is below. I promise I won't bite. I usually don't. I only bite back. And we can just have a pretty cool conversation to make sure that your closing day is a celebration, not a catastrophe, and definitely not an exasperation. Talk to you soon.